Okay, so hopefully you can hear me. We are going to be going over a little strategy that you can use on pocket option. So this is a strategy you can use for OTC markets. Remember, OTC is over-the-counter markets, meaning these brokers create the market to mimic what the market's usually like on the weekends for people to be able to trade on the weekends that love trading so much. Now, remember, they can be way more volatile and sometimes they will not go as planned as the actual markets. So that's why I'm going to be doing a video on this with OTC. Now, remember, you can take this same concept, everything I'm teaching, and apply it to the regular markets, and it's, in my opinion, I've seen it work out smoother and it actually go from like an actual trend compared to consolidating sometimes. So this is what we're going to do. We're going to go over this strategy. I call it the simple strategy. I try and keep it super simple. So what you're going to do is you're going to come up here. You're going to go on the 5-minute chart. So make sure you're on the 5-minute chart. You can have these candles or you can do these candles. That's up to you. Whatever your preference is. And as you can see, you can kind of determine when the market's going to do a little reversal by the way these candles get. If you choose this candle. Now remember, it could fake you out sometimes too. So remember that. Because that's like kind of consolidating, where this is more of a trend, which is where you want to be trading. Trend is your friend. Remember that. Consolidation, when you see that type of thing, I would just steer clear, come back like 35 minutes later and 35 an hour later and see how the markets look. That's what I do. Remember, if I get on in the morning and it's consolidating, I'm not doing it. I'll come on like an hour later and do my thing. So with this, I like to trade with the regular candles. You can use these candles if you want to, up to you. So you're going to go to indicators and you're going to click on Stochastic Oscillator. You're going to click on that. And when you originally click on it, it's going to come up with a second one. Well, one that looks like this. You can use both. I like the setting 5, 3, and 3. You can use the setting 14, 3, and 3, or you can have both. So when they're both in oversold, you know it's going to come down. When they're both in, or I mean oversold, you know it's going to go up. And when they're both in overbought, you know it's going to come down. So you can have both of them. I sometimes like to use both of them. I sometimes like to switch back and forth between the two. If you like one you like the most and you just realize you go off of this one a little bit more than this one, you can go with that if you want to. Now, I'm just going to get rid of this one for now. And we're going to get our Bollinger Bands. So you're going to hit Bollinger Bands twice. It's going to bring up 2 Bollinger Bands. One that's going to look like this, although it's going to be yellow. You're going to see. And it's going to have a line in the center. Just like this. So this Bollinger Band, you're going to leave exactly how it comes. 20 and 2. The second Bollinger Band, you're going to click this little pencil and you're going to change it, the deviation to 3. And you're going to change the colors to blue, background. I just took it off. I personally don't need it. You can have it on if you want to, but I just don't like it. It bothers me. And the middle, you can take off or you can leave on, whatever you want to do. And there is your 2 Bollinger Bands. Then we're going to get a moving average. So right here, there's a moving average. You'll click on the moving average and you will make that a 50 EMA. Do not change it to SMA, none of that. EMA, 50 EMA, and then change it to whatever color you feel like having it. And then, with that being said, I like to use fractals. It's my personal opinion. I like to use them. It kind of helps with the reversal of the market, kind of lets me see what's going on. I just like it. Remember, if the arrow is pointing up, that means the market's going to go down. If the arrow is pointing down, that means the market's going to go up. If it's pointing up, it's going to go down. Down, down, down. Go up, down. Now, it didn't show it on that one, but sometimes it just won't show it. But when it's a strong one, that's what they tend to do. So it will usually show up on the second candle, and you'll be able to determine whether it's going down or not with just the fractals. I like to leave them there. Now, here's an example right here. We're going to go back a little bit because right now, I don't like that. You do not trade in anything that looks like that. I can tell you, it's a mess. You lose your money. It's not worth it. But if you see a market going like this and you see it going up and up and up, I like to wait to take my trades. I don't take my trades anywhere in here. I just don't like to. I like to take my trades when they're here, here, and when they're hitting this band or sometimes this band. So I'm going to go back and give some examples. Right here, you see this one coming down as a sell. I'm going to zoom in just a little bit. This one's coming down as a sell. I know that this is going to be going up for a buy because my stochastic crossed, which means it is in oversold conditions, and I'm going to be placing my buy right here for 5 minutes, 3 to 5 minutes. You can do 3 minutes too, but remember, if you lose a trade, I personally, well, remember, if I lose a trade, I personally double up. So I'll just do the next trade as that and take it up. So I would place a 3 to 5 minute buy, whatever you feel comfortable with, whatever you think works best for you and your strategy. And the fractal did not come up yet, so you can kind of ignore that. We're going to turn this off for a little bit. You know what the fractals do already. So I would place a buy here, and I would take that up. Remember, you only need one candle to make this a successful trade, or you can wait till the next candle and then take that one up. Remember, this is 5, 10, 15, 20, 25, 30. This went up for 30 minutes. 30 minutes. You just need to place a 3-minute trade somewhere in this general area. I don't like to place it when it gets in here because then that means the market's right here. Sometimes it can come back down like you see it did right here in this stochastic. So simply, I like to trade from top to bottom of the Bollinger Band. Now here, I do see the stochastic crossed. I might have taken this trade because it went up so long. I might have taken this trade for maybe a 1 to 3 minute, 2 to 3 minute put, and then I would have gotten out of there. I might have. But I usually like to stick with one end of the Bollinger Band to the other. So this is OTC, so it's hard to find more of a trend with this market because it's very volatile. With the regular markets, you'll be seeing more of a trend, as you can see here. This kind of shows it. Right down here. Oh, right here. Sorry, not here. Here. You see the stochastic crossed is coming up for a call option, and I would take it for a call option up. Right here. I don't know if I would have taken it. I'm not sure because the stochastic didn't match up. So that's kind of like an unsure trade. I like to do like a point system with it. So if it's 2 points, or if I have the other stochastic in there, I do a 3-point system where if it's hitting the Bollinger Band and it's crossing over, then I take it. Now this was close enough. You see it almost touched right here. It was so close. And the stochastic crossed. So I would have taken that down for 3 minutes. I would have waited for the next candle, watch it go up. I like to watch it for at least a minute or two into the trade to see what direction it wants to go, see where it likes to push the most, and then I would take it and see what happens here. Same with this. Remember, this is OTC, so it's a little more difficult to find so many good trades because it is a volatile type of trading. So remember, you'll be able to see more trends of going up and down when you're in the actual markets that are not OTC markets. So with this, I see it cross. It went down to my second Bollinger Band. I know when it goes down to my second Bollinger Band, it's definitely coming back up. So I wait for the next candle, and I would get in at its highest high or lowest low that it would go to. So it went all the way down here. I would have watched a candle for a little bit, because remember, you don't have to jump in right away. Patience is key. Patience is key. And if you lose a good trade, know what you just did? You learned something. You learned that, okay, now I know next time I see a good trade like this, I could be a little more riskier if you wanted to and get in right here or get in down here. You know what the market's going to do when you get used to the strategy. So remember that. Don't be upset with yourself if you lose a good trade and you just ended up watching it. Sometimes you just need to end up watching it, or switch over to demo and try it out if you're unsure. But if you're sure, like me, I would have taken that right here. I would have watched it go all the way down because I know it's at my second Bollinger Band. I would have watched it go all the way down. I would have taken it, and then I see the stochastic crossed. I would have taken that for 3 to 5 minutes. That's 5, 10, 15 minutes. I just needed a 3 to 5 minute trade, and I would have been profitable on that trade. So you kind of see where I'm getting at here. Right here, stochastic crossed. It was up here. It came up here a little bit. It came up here a little bit. But remember, even if you see it come up here and this is not up there yet, don't take it. If you see it up there now, then I would be like, okay, let me go watch the next candle and see what happens. If it goes straight down like it's showing right here, then I would have gotten in like right here and taken that. That's 10 minutes. And I would have taken that for a 3 to 5 minute trade. Now, here's another one where the candle came all the way down here. I would have watched this one because my stochastic wasn't necessarily oversold yet. So I don't know if I would have taken that one. I don't like to take trades that are in this realm of the stochastic. I like to take trades that are over, and over here. So overbought, oversold. When you get into here, I don't like it. I'll come back later. That's just my personal opinion. So let's look right here. You see this one? It won't let me zoom out anymore. So right here, you see the market went all the way up to this Bollinger Band. I would have saw it go back down, go back down, go back down. Once I saw that it was forming that wick, and I knew it was getting to like its highest point, and that stochastic was up there and it was starting to cross, I would have gotten in and taken that down. And remember, you're not really taking that down all that much because it's 5, 10, 15, 20 minutes. 20 minutes right there. Remember, you need a 3 to 5 minute trade in order to make it profitable. So when you look for those long trends, those long ones, those are the best ones to take. Those are the best ones to be on top of. When you start, and right here, this is a really good example. Right here now. It was in oversold conditions. It's coming back up. 5, 10, 15 minutes. You just need a 3 to 5 minute trade. And right here, this is a really good one. A really good one. Actually, it crossed perfectly. As you can see, it went up, touched it, came back down. And I would practice, like always, I always suggest practicing in the demo account, seeing what happens. Now, this kind of thing you will run into sometimes, where it will literally stay oversold, oversold, oversold. But you see, it's running across here. That's why sometimes you want to watch for the next candle to see what happens. So when it's just flatlined like that, I don't like to take it. I like to take it when I see a clear cross, not when they flatline together, because that means they might just continue going along with each other. But once they start separating again, I know when they start separating right here, even though it doesn't look like a cross, it just looks like it's separated, I know it's coming back up to go into oversold conditions. So when I start seeing that little, the red candle get weak, I know that this candle is going to go up and go into oversold conditions, so I can take it back down again. So you kind of see what I'm talking about here with this strategy. It is a little time consuming. If you like come into the market and you're like, oh, I got free time for like 30 minutes and the market looks like this, I better not hear about you losing a bunch of trades, because you know this is consolidation and the market's just wacky right now. You want to look for more of a trend. You want to look for when it hits the top of the Bollinger Band, it hits the bottom of the Bollinger Band. When it hits that blue one, I know it's definitely going to snap back and come back down, especially if the stochastic goes along with it. So that is just my suggestion. This, I would wait it out till the stochastic went back up here. Even though it's up here right now, I just don't like when that stochastic is right here. I just personally don't like it. Look at that. Look at that right here. You don't want to be trading in markets that look like that. You don't want to be trading in markets that even look like that sometimes, because that could get you really quick because you don't know what's coming next. So, and then as you can see, this one came along and was like, okay, we're going to go down here. Stochastic's going to cross. We're going to come right back up for 10 minutes. I need a 3 to 5 minute trade. Perfect. Got in, got out. Boom, done. Now, sometimes you'll see it will ride the edge of the Bollinger Band. And that's when you watch it and see what it does. Because sometimes you will just, I knew the stochastic was looking funny because of this. So even if you cut this off right here, I would have saw it and thought to myself, I don't know, because it hasn't shown a previous history of just going up and down and up and down, because usually the market does that. But when you're working on OTC charts, it's kind of difficult to predict that. So that is my example for you. And you will see me do more live videos with this strategy, showing you how you can go about placing trades with this simple strategy. And we will do future videos with this, but I wanted to get this out there. I wanted to get you educated a little bit on it. So here's the Bollinger Band information, the moving average information, and the stochastic. And I hope y'all have an amazing day, and I'll see you in the next video.